Hello, everyone, and welcome to the second Copper panel hosted by Six. We're joined today by Alistair Ross, the CEO of Rockcliffe Metals, Brian Booth, the CEO of Element 29 Resources, and Leif Nielsen, the CEO of Surge Copper. Today, in this panel discussion, we'll be covering the future of copper and everything from here to there. As always, you can submit your questions at any time during this panel discussion using the right-hand side of your screen in the Q&A panel. This summit is being recorded and will be available to watch afterwards on six.com. And with that, we're going to launch right into it. So to start with, Leif, I'd like you to take a couple minutes, introduce yourself, introduce your company, talk about what's happening.
Sure. Thanks, Cam, and very happy to be here. My name is Leif Nielsen. I recently came out of a 15-year career in investment banking, most recently with Macquarie Capital, which is the large Australian-based investment bank. Joined Surge as the new CEO in January of this year. The company is in the middle of a bit of a board and management refresh that's been going on since we did a financing last fall. The strategy is really focused around consolidating a very big land package around the Huckleberry mine, which is one of Imperial Metals mines in British Columbia. Currently on care and maintenance, one of their assets that they're probably looking forward to assessing restart economics around. Surge controls a very large resource base on these properties and is focused on exploration and development to advance those projects over the next couple of years.
Thank you for that. Brian, I'll pass it to you.
Sure. Thank you, Cam. I'm Brian Booth, President and CEO of Element 29. Been in the mining business for plus 35 years, spent first 23 years with Inco Limited, and then went out and started at Lakeshore Gold, which is currently owned by Pan American Silver, and was the chairman of Claude Resources, and now joined the board of SSR Mining through that transaction. In the last 12 years, I've been working in copper in Peru, and then, of course, the last 2 years with Element 29, and looking forward to advancing our two projects that are, already have historic resource plus a lot of drilling that we can rapidly move forward to, higher levels of engineering and other studies as we move forward in Peru. Thank you.
Wonderful. Thank you. And last but not least, Alistair.
Hi, Alistair Ross, the President and CEO of Rockcliffe Metals. My brief history is I worked with the majors most of my career. Unfortunately, it's about 40 years now, Brian. Sorry, 5 years picked on you there. And mostly in base metals and some in gold. The last major job I had out there was president of Lonmin in South Africa, the world's third largest platinum group company. Joined Rockcliffe about just nearly 2 years ago now, primarily because I really liked where copper was going at that time. And we'll talk more about why I think it was a really good idea, given what's happening now. And of course, the land package is a great jurisdiction. So what Rockcliffe has is a number of claims and a large area in Manitoba that we've done a lot of advanced exploration on now. Key being the PEA that we published just around Christmas time. Key results in that PEA were roughly a 70 million NPV with about a 30% rate of return on that project. But I think the important part that we want to show there is that was at $3.15 copper, $1.10 zinc, and $1,500 US dollars an ounce for gold. Clearly, economics look a little different if you push today's prices into the model. The two key issues that we're working on now are, as a result of the findings of the PEA, is how do we extend mine life from beyond the 6 years that we have there at the moment. We'll talk a bit later about what we're doing there. And then the other thing is how do we reduce capital? And one of the things we really like about the frothiness of this current market is that, when we started all this work, copper was back at $2.60 a pound. And we were really looking at how do we keep the operating costs down to have margins available on these shallow, near surface deposits that we have in Manitoba. And of course, as prices go up, we can afford a slightly less operating margin than we thought we'd do, or a higher operating cost, but a lot less capital, because the PA said for us to raise the capital we need was a bit much. And so now we're pretty excited about alternative ways to reduce that capital down. So in a nutshell, that's where Rockcliffe is at the moment.
Wonderful, thank you. Now that we're all a little bit more familiar, let's get into the meat of this panel discussion. And with that, I'll ask the first question. Of course, nice and simple, and I'll field it to the entire panel here. So feel free to answer. But what does the panel think about the future of copper in the realm of modern technology?
So
I can start if you'd like. I think the key trends that I think all of us are aware of and are certainly excited about in terms of the macro trends behind the copper market are a mix of the mega trends in the EV adoption in the global vehicle fleet, as well as the mega trend around renewable energy generation. So really both of these, I think, tie into the thematic of climate change and industry and technologies approach to combating that challenging issue for our times. So really, in both of those spheres, as you look toward more and more adoption of EVs in the global vehicle fleet, as well as energy generation and transmission systems around renewable power generation, the intensity of the usage of copper in all of that, all of those technologies is significantly higher than their competitors or the older technologies there. So really, a lot of those trends are what's driving these forecasts that we're seeing coming out from metal market analysts, investment banks, et cetera, talking about significant growth on the demand side in the coming years. At the same time, you have some challenges on the supply side with the classic sort of underinvestment that you see when there's a significant prolonged downturn in a metals market. So in a lot of the copper producing regions of the world, there's been a lack of exploration investments and development investments. So I think there's a bit of a kind of supply deficit adding to a bit of those trends.
Yeah, I think I'd like to just emphasize a couple of the points Leif made there, because it always astonishes me when you get down to the nitty-gritty of the numbers. For the battery electric vehicles, they're estimating the average vehicle, the light vehicle that is, it's going to have 80 kgs of copper per vehicle. And that's 4 times the average internal combustion engine usage of copper. So the other piece that I find fascinating about the electric vehicle story is that BHP did a big report that they published in, I think, April or May of 2019, so before the pandemic and everything. But I think it's still a good benchmark for us, where they estimate that by about 2035, there'll be a 7% market penetration worldwide of the battery electric vehicles. And what I find interesting about this, and that's the low end, if you take the mid-end case, just to provide the metal by 2035, to have a sort of 15% penetration of the electric vehicle market, we're going to need 1 million tons a year of copper, just for the vehicles. We're not talking about the charging stations. We're not talking about where the electricity comes from. And Leif was talking about there the whole point about how do we transform not only the existing grid to renewables, but the increase in demand that will be required to power that new technology, especially on the battery electric vehicle side. We'll talk a little bit more about generation and electricity transmission just in a bit, but just on the electric vehicles themselves, 1 million tons a year of copper. And I don't know what size mines Brian and Leif might be talking about there, but we don't anticipate producing 1 million tons a year from our deposits.
No, and I, just to expand on, what both Alistair and Leif, mentioned. I mean, the political demands on the West, especially, to go in this direction and to reduce emissions with new technologies. There's no question that the mandate's going to be there, requiring, additional supply to be there. And as they've said, the supply is, the exploration in all of these areas has been lacking for copper over a long period of time. It certainly lags behind precious metals in terms of grassroots and that type of exploration. So the pipeline of projects that need to be there, that are in the majors' hands at least, are a little bit lower grade, and are going to have a higher price point in order for them to go ahead. So I think that's what you're seeing, a surge in these prices, because it's going to be a lot easier to expand a mine with lower grade material than it is to build a mine, which takes a long period of time now. So those are all the challenges that we're going to face. And all this electrification, I mean, we can give you a lot of examples of areas where the demand's going to go up 3, 4, 5-fold compared to what the market is today. So I don't see any changes to that, and we're going to have to find a way to get that supply so that we can make those adjustments to the electrification.
Absolutely. Thank you all for that. To that point, what does the panel believe the fundamental value proposition for copper is in the new green economy? Alistair, would you mind leading the charge on this one?
Sure. So if you think that populations will be driven towards electric vehicles by government legislation and, of course, their own desire, I think the big story here is where Leif was talking about just now, which is where does the new electricity come from, as well as replacing any of the fossil fuel driven current generation plants. And I think, Leif stated this, but we'll just put some numbers to it, is that I do find it interesting that the International Energy Agency's 2020 report upped their amount of solar generation from 2018. So just 2 years later, they upped their amount of solar generation coming onto the grid by 43%. And the reason they're able to do that is, I don't know if you've been seeing the headlines recently, is that the cost of generation from solar has plummeted to, it's hitting around now the $20 per megawatt hour to produce from these plants. So it's clearly, it's not only cost competitive, it's cost advantageous now if you're building a new plant, assuming you're in a place where there's sunlight, of course, but a lot of places do. And so it's very clear that a large piece of how we get rid of fossil generation plants, but also increase capacity, is going to come from renewables now. And the big story about that is the amount of copper required per megawatt compared to fossil. So there's reports saying up to 12 times the amount of copper per megawatt production is required for renewables. And notice that the cost of generation is still incredibly low. It's better than fossil fuel. And the other thing I like about the battery electric vehicle story is that if you get to a mid-level penetration by 2035 of, say, 15% of the world's light vehicle fleet, that's 1.3 million barrels a day of oil that's not consumed. 1.3 million barrels a day. So I think this whole combination of electrical generation plus the transfer over to BEVs is the big story. And I can't emphasize enough, and I think we'll talk to it later, about the role of copper compared to all other elements. It is the dominant element required at the fundamental place to either construct them in the case of the turbines in the generation plants, or specifically connect them. And I love that fact around offshore wind plants. When there's about 4.7, I'm just going to check the number here. Yeah, there's 4.7 tons of copper in a wind turbine. 4.7 tons. So as these get built, the consumption of copper is going to be just screamingly high. And we'll tie it back to macroeconomics relief was just now, with the governments demanding much of their post-COVID expenditures to boost economies, to create green economies. We're going to be scrambling to bring these mines online.
Yeah, I mean, my 2 cents on the question about the value proposition for copper specifically, I think is it's relative to a lot of the other base metals that get captured in the I think the thematic or the orbit of battery or electric metals is copper, probably more than a lot of the other ones, doesn't have the same degree of substitution risk. So I think when you're looking at batteries that end up in different metals that end up in different battery chemistries and configurations, really they're all chasing different use cases, whether it's energy density for use in cars or handheld electronics, or cost efficiency for grid storage or things like that. And I mean, you see new articles coming out all the time about startup companies or incumbents in that business that are chasing down new technologies in the battery business to try and navigate around some of the challenges that you see in the supply chains for a lot of these metals. Copper is quite a bit different there, both because of the physical nature of the metal, but also I think the supply side. So it doesn't face the same challenges as something like cobalt, where it can only be found in a few places in the world and size, and there's challenges associated with those locations. But then on the physical side, I think it's it's the quintessential electric metal. If you want to move current somewhere, it's the way to go. There are cases where it makes more sense to use something like aluminum versus copper, but broadly speaking, it has the broadest range of physical characteristics in terms of moving current, ductility, ability to sort of mold it into wires or other shapes that are necessary for technological applications, and supply in general. It is we're obviously talking about positive market dynamics here related to supply and demand dynamics, but copper is, relatively speaking, a metal that is can deliver the goods in terms of delivering substantial volumes to meet these end use applications. So to me, the biggest point about its value proposition in a lot of these trends is that it won't suffer the same, I think, volatility risks that you see with nickel, cobalt, other metals like that, as it relates to substitution risk in its end markets.
Yeah, and that's just to expand on that. I can't see the market is only going to be expanded. It needs a reasonable price for a lot of the supply to ever be met. So I can see only a value increase to the price and of copper in the traditional economies. That there's still going to be the normal uses for copper in houses and so on and so forth. It's not going to change. But with all these new advances that we need to meet these new the new emission reduction scenarios. There's no way that the copper market can go the other way, I don't think. So it's really going to see, the demand is going to be intense, but the supply is going to be tight. So that's going to keep the price, I think, high for a little while.
Fair enough. And to this point, clearly the conversation is wrapping up around how copper is integrally linked to the green revolution and electrification, of course. But what differentiates copper from other commodities such as nickel, lithium, manganese, and graphite that support green energy?
Yeah, I think both Leif and Brian sort of touched on that, and maybe I'll just underline what I think I heard them say, because it's certainly, I think it's pretty factual. A lot of those metals are linked specifically to the battery manufacture, and it doesn't matter, as they said, is it the storage end or is it the high output end needed for vehicles. Copper, yes, it's used in the batteries, but the major use for copper won't be inside a battery. It's going to be about the electrical power grid. It's going to be the generators, it's going to be the transformers, and then it's going to be all the cabling. If you look at the quantity of copper that's going to be used outside of those prime areas, it becomes relatively small. So what I love about copper not being in the same boat as those other they're very important energy metals, don't get me wrong, is that copper is agnostic to the technology that wins. So let's say nickel, cobalt, manganese dies, and suddenly lithium, iron, something comes up. copper doesn't care. It's waiting there to either direct the energy into the battery or take it out, and so and then it's there for all the green generating that needs to occur. So I don't know if that's where Brian and Leif were going, but that's what
I would add to that urbanization is another big mega trend that's been afoot for many years and will continue well into the future. This is a thematic that other folks in the copper business I think have been talking about in earlier cycles, that the rapid urbanization of very large populations in Asia is one of the key drivers to demand there, and that's a trend that has continued unabated and will sort of be part of the underpinning of demand for many years in the future. And what that relates to is, as Alistair was just saying, it's not about the high tech applications. It's actually about a lot of the low tech things in terms of connecting things together, moving current from point A to point B. So household wiring, basic appliances, all these things are a significant use of copper, and there isn't really a ton of substitution risk in a lot of those applications.
That's right. And just to expand on that, just the charging stations that would be required if we just look at Canada as a whole, getting from point A to point B. If you're in the urban centers, it's quite fine. You charge your vehicle overnight, you move around during the day, you come back, you charge it again. But start to step outside of those cities. We don't have the grid, the charging station capacity around the country to allow the car, and then 40 minutes of charge. How are we going to have the lineups for those things? So there's a lot of technological changes that have to come so that charging gets more efficient, shortened. Because what is it, 5-10 minutes to fill up your car with gas? Well, no, you'll have big lineups with people trying to charge their vehicles around the country as they move around.
Absolutely, thank you for that. Bringing it back to an earlier point, and certainly into very wrapped up in this topic, but maybe Brian, you could take this one. With the surge of demand for the commodity, as you've talked about, do you think there's going to be enough of a supply of copper, or do you think that we'll find substitute commodities for it? Maybe you could just elaborate on that subject.
Sure. Well, over the course of my career, and all of us here, we've seen, the time from discovery to production is increasing all the time. There's stakeholders, there's different legislation, there's permitting, all of those things, environmental requirements, and so on. So added to those years, the market, moves very rapidly, wants change very rapidly. But the mines are taking longer and longer to build. So the established copper producers, it used to be 1% copper. Now the copper grades are coming down, and the price had to come up in order for copper mineralization around mines that was considered not to be economic becomes economic, because it's going to be a lot faster to move that material through the mine than it is to build a brand new mine going forward. So that's the challenges that we're going to face, and I see supply being tight because the market wants the commodity faster than we can probably deliver it in the short term. That's going to mean the price is going to stay high, so that those companies can put in the capital, spend enough time to actually develop the copper that's readily available on their footprint. And it's going to be a case-by-case basis, which mines can go into lower grade material. Some won't have it, or be too far away, or it still won't be economic. So we're going to have to try and build these mines faster. So there's going to be tight supply, I think, over the next 10 years.
Yeah, I agree with Brian's comments. I think we often talk in our company's marketing material about the prevalence of porphyry copper deposits as a source or supply of the metal. I think roughly 2/3 of global production comes from these types of deposits, and most of the major mining companies in the world operate at least one of them. And Brian quoted the sort of well-known stat that in Chile, for instance, where probably about 1/3 of global production comes from, there's a very discernible trend of average grades declining in many of those mines. So that sort of seems like a train that's left the station, and it's very hard to reverse with a lot of the demand dynamics that we're talking about. So the net effect of that is really a sustained higher kind of normal level of price going forward, I think.
Yeah, especially when you see what the grade's done. So in 2004, the overall Chilean production, and Leif's right, they produced just under 6 million tons a year of copper. Their average grade in 2004 is running around about 1%. And in 2019, I don't know the 2020 data, but in 2019, it dropped to 0.67.
Yep.
But just the capital intensity required to bring new mines on as the grade drops, you can imagine, it's huge. And so I think what I also find interesting about Chile is that there's current legislative talks about raising the tax on copper in Chile from 3% to 2%, 10%, sorry, for the copper producers. So not only do they have to overcome this whole thing about I've got to put how much money in for a 0.67 deposit, and I doubt they're finding 0.67 to bring online. Those are already online. The ones they bring in on will be even lower as the next generation. And then to be faced with that tax, it means the copper price has to go up to bring those deposits on. And that 2/3 number that Leif says about the porphyry deposits, what's fortunate for copper is that we still know a large number of porphyries that have never been developed because they're down at 0.2% or whatever. We do know where they exist. There's just no economics could ever bring them on. But we link back to that substitution conversation we're having earlier. It's not like cobalt, or remember the platinum one before Dieselgate hit. We never knew where the platinum was going to come from to take care of diesel emissions. It was impossible to find that much platinum in the world. And same when batteries first came on and the amount of cobalt was needed, there was not enough cobalt to do that. Now, fortunately, we found much better battery chemistries and they've managed the amount of cobalt in there. For copper, we do know where it could come from. It becomes more a price issue. And so as long as the proportion of the copper in the projects doesn't kill the project for a offshore turbine construction or anything like that, you can afford a fair amount of copper price hike and still bring that technology online and save the planet. It's so that for me is the biggest factor as to why copper won't need to be substituted for a start, but also why the solutions that we're working on can actually fulfill the needs for all these economies.
Wonderful. Thank you, guys. Now, as most conversations these days seem to turn to, I'd like to ask what COVID's impact on copper has been. For instance, as we can see, TransLink, Metro Vancouver's transportation system, has started piloting the use of copper in high-touch surfaces inside their buses. What are your thoughts on that? Maybe Brian, you could take this one.
Sure. Well, it's been known for a while that, certain things can't live very long on copper surfaces. So that's the experiment that's going into TransLink, where everybody puts their hands on the rails and, so that minimizes contact between things that might infect people. So, the challenge there is it's a soft metal. So, but it's being adopted for that, and it's an experiment that we'll see whether the applications and strengthen that so it has durability, from that standpoint. But from another point of view, during COVID, obviously there were supply fluctuations because mines were struggling with infections, slowdowns, lockdowns, etc. So we saw that over the year, that mines were disrupted by those and had to put in protocols, and I think now the protocols are in place and they're still managing those, but that should be worked out, towards the end of this year. I would hope as places get vaccinated, but of course the third world is very, very behind in vaccinations, so it'll be longer than that to deal with that. But because mines are sort of isolated areas, you can sort of bubbleize them to some degree, versus the big cities where it's very difficult. So that's where I see things happening in the next little while anyways.
Yeah, I mean, I think the stuff you mentioned about the use of copper for sanitation things is interesting, and as Brian says, it's sort of experimental. I don't see that being a panacea or a huge near-term driver of demand. I would be more focused on the supply disruption side. I mean, the pandemic is obviously not over. We're in the early days of the global vaccination program, and the sort of global numbers of infections and death are sadly reaching all-time highs where we are today. It's obviously moving around to different parts of the world, but I think it will be, the end is not quite crystal clear yet in terms of impacts on supply chain disruptions and things like that. And then secondly, I made the comment earlier about urbanization. I mean, this is certainly one of the short-term impacts of COVID in where we live in Canada, and certainly lots of other places in the world, I think, has been a pause or a bit of a disruption to that trend of people moving closer and closer to downtown cores. There's been certainly a lot of disruption in real estate trends and that sort of thing. So there certainly might be near-term or short-term implications in terms of households end markets for copper that derive from some of those perhaps secular changes relating to urbanization and things like that.
Yeah, and on that technology piece, maybe less about copper, because I think I agree with Leif. I don't think there'll be any short-term big boost for copper demand from that sector. But what I do find fascinating is what COVID has done that is changing the way we look, not only, as Leif said, about do I want to live downtown amongst 5 million people, it also, to keep the mines operating, the technology that's been adopted underground, I think is this incredible one that has long-term potential productivity enhancements, particularly for underground mines, because they've got this technology now where every person entering a mine, at the end of their shift, a report comes out about who were they in close contact with during their shift, and it just gets dumped and filed. And if one person reports symptoms of, in this case, COVID, they'll know who that person was in touch with. So you don't have to shut down this mine. You can say, oh, you were next to these 10 people, either in the cage or in a lunchroom, or no, you did this job together with them. And those people immediately pulled out and tested. And so they're able to control very rapidly any outbreak in a mine where it doesn't now just spread to everybody who happened to be in the warm room getting the lineup at the beginning of the day. So why long-term is this an advantage? Because we lose a lot of productivity to the flu virus. We have people with days off every year due to the flu virus. And we've never really bothered about trying to control it in the past because the impact is not at the level of COVID. And yet the impact is very significant. And so now we've developed these tools that says, you know what, I bet you we can control the flu virus and improve productivity. And I don't know if you saw the report for 2020. It's the lowest level of flu infection that the world's ever seen. And it's because we took all the COVID precautions. And so now it's available to us if we want to make that choice, where we can actually make a lot more from our mines with the same workforce by putting COVID protocols in that make sense anyways to protect us from any virus or viral transmission. So I'm very encouraged by how we're tackling COVID and the role on impacts. It's a bit like the space program. I now get a pen that I can write upside down on. We're going to have those. It's going to be big. And we haven't even asked, we don't even know which questions to ask for some of the uses of copper yet, that where technology can catch up for the demand 20 years from now. It's a bit beyond us, but that's going to happen too.
It's certainly going to be very interesting to see where the world turns after this, this defining couple of years. But more to the previous conversation, due to the surge in price of copper, we'll most likely see a lot of new arrivals in the copper mining space. So what sets your companies apart from newer entrants? Alistair, if you could take this one.
Sure. I think what I particularly like about where Rockcliffe has ended up is that we've got the PEA behind us, which has given us those two key pointers to look at. So we have a lot of data, and we've advanced our permitting along significantly where, from the minute we get a decision or the money to go, need a few more study, but get the studies out the way, it's 2 years to production. So I think that's a very short time frame for us to put metal into the market. And so depending on your time frame that you're looking out on, it's beginning to look like this isn't a 1 year high for copper. In fact, Goldman predicts something completely different now. They're the most aggressive of the lot, but maybe those are the right ones to refer to for this conversation. And so if you can say 2 years out, we're definitely still in a high copper price. We're not back in the $2 range. It starts to make financing very different for us. So what I like about our differentiators, we've got a lot of facts out there now. And so it's the ability to start having conversations with finance folk that says, maybe you can finance shorter term projects, shorter life projects, because they're on fast and they get depleted during the high price environment. We don't even have to worry about a low price environment. And we'll talk maybe a bit more about the sustainability of copper price a little later in the conversation today. But that's the key differentiator, is that we got the data and we can go fast.
Absolutely. Leif, what do you consider to be the set apart from you and potentially newer entrants?
Yeah, I mean, for our project, I guess the key thing and the focus of the strategy is that we are positioned right next to one of the mines in British Columbia that, as I mentioned at the top, it was placed on care and maintenance in 2016. At that time, it had a life of mine that was meant to take it to 2021. So there's around 5 years of reserve life left, and our deposits look to be the very logical extension of operating life with that infrastructure. We published a PEA around that time that characterized some of the economics around that concept. I mean, very, very high IRR and quite attractive economics around that. Where we sit today, we're focused on growing that concept and sort of bolstering some of the longer term value potential and value thesis around that. But more broadly, I mean, this is obviously a brownfields area of BC that we think will lend itself well to a pretty clear permitting path and path to production. And BC as a jurisdiction broadly, I made a comment earlier on about porphyries just being I think unassailable, important part of the supply chain for copper. The majority of production comes from these types of deposits, and most mining companies have at least one in their portfolio. And if you look at where these types of deposits exist around the world, in terms of the geological environments they exist in, a lot of the countries are either challenging jurisdictions to deal with from a social license permitting perspective, what have you, or there's really vexing and challenging environmental issues. So Chile is, I think, one example of that. It's obviously had a prolific history of production from their mines, but a lot of those mines sit in the driest region of the world. Water is a big hurdle that a lot of those projects need to get over, and they often solve that problem with desalination facilities down at the coast. And so, if we think that the long-term focus of copper supply is going to have an additional layer of, how can we ensure that the supply chain is decarbonized and has various other kind of ESG factors working in its favor. I think BC as a province ranks extremely highly in the global landscape from that perspective, and it'll continue to attract more and more attention from majors in that regard.
Thank you, Brian. What sets you apart?
Well, I think what sets us apart from the new companies that are coming in is that we have two advanced projects in Peru that are in great locations. I mean, one of the things that we always looked at when I worked for Inco was like, well, the checkbox of, well, is it close to infrastructure? What's the capital expected going to be? Is it remote? Does it have social license? And in both of our cases, our projects are big porphyry footprints. We certainly have SXEW opportunities in one of ours, which is a historic resource that was drilled off by Phelps Dodge in the 1990s when you needed 1%. we have, a historic resource at 0.67, which now puts it in the upper quartile of grade. And it's all above 200 meters from surface, and it's certainly a project that we can manage. It's not going to be billions of dollars to develop an SXEW. It's going to be a couple $100 million perhaps when we get to that stage. So we're advancing our projects really quickly into engineering studies in the next year or so, once we get drilling off the historic resource to modernize it into a 43-101. That's our Florida Cobre project, our Alita project, which is also low elevation, has water, power readily available. It's only an hour's drive away from the coast on the way to Antamina. Again, a great mining situation. The social license 1 community have had an agreement for 5 years, just renewed it for another 5. So all of those components lead to a situation where you have a large potential project for copper, but it is a buildable project, and both of ours are that way. But we have the optionality to build it ourselves in one case, and potentially the other case as well, where it has potential for an SXEW opportunity. So I think that sets us aside. We're not a grassroots company. We're already starting with probably $15 million US worth of work done. We're just going to do the 2 resources this year, and that's going to be our starting point, and then moving quickly to PEA on the Florida Cobre project next year.
Wonderful, thank you. I'd really like to move to the Q&A session, but before we do that, I'd like to do 2 things first and foremost. For everyone in attendance, we will be moving to the questions and answers portion of this panel in just a moment, but for the panelists, I'd like to take just a couple of minutes if you'd like to talk about any upcoming catalysts this year that you'd like shareholders to leave knowing. Let's start with you, Leif.
Sure. So at Surge, we've actually recently completed a 20,000 meter drill program that ran from November to March of this year. It's the first drill program that's taken place at our main project in a number of years. There's a bit of period of underactivity in this corner of the market, of course. So quite excited about the results that have come out of that. We've probably released about half of the results from that so far. So and definitely saw some excellent drill intervals come out of that. So expecting to see more of the same with the other half that will be coming out over the following weeks. We're also very excited to be launching the first ZTEM geophysical survey across the entire Huckleberry district where we're based. It's a type of technique that works very well in porphyry cluster, intrusive cluster type environments, especially where there's a bit of cover, which we have in the southern portion of our district. So hope to have a lot of exciting targets to chase up on the back of that. And then we did add a sizable project to our portfolio just before the holiday period last year. This will be our first year as operator of that, so we'll be getting in there with some drill rigs later this summer, and getting at that for the first time this year.
Thank you, Brian. Some catalysts upcoming, just quickly.
Sure. This year we're well funded. We just completed the IPO, so we're very shortly. We anticipate getting ready with the drilling at our Alita project. This is a very large porphyry. There's already 18 holes, with half of them over 500-meter intersections at very good grade copper, molybdenum, and silver. We'll be expanding and drilling additional holes in that, and we'll come up with a maiden resource for that towards the end of the year. So there'll be a lot of news flow on drill results on that project. We're also going to be drilling our Florida Cobre project, where we have that historic resource. So we'll be modernizing that. So there'll be drill results in and around that throughout the next 6 months, culminating with another resource technical report, and then of course that we'll start some metallurgy and start some engineering on that project towards the end of the year. So lots of news flow in the second half of the year. So it should be a great year.
Thank you for that. Alistair, anything to add?
Yeah, for us, as we said, the 2 key things that the PEA would directed us to take a look at, one was the initial capital, and the second was the length of the project. We're doing a lot of work on how might we double the length of our project. So towards the third quarter of this year, we should have enough data in our belts to see if we can actually achieve that doubling. It looks feasible at the moment. So once we double the length of the project, it certainly takes care of a lot of the financing issues, especially for debt capacity. So we're pretty excited by what's potentially available to us there. I think the other thing that we're particularly excited about are the external catalysts that continue to drive or keep the price up and drive it up, actually. If they start to land as foreseeable future type results that would fit in with the development and operation of our projects, just moving from a 315 copper in our PA to $4 adds in excess of 100 million NPV to the short life project, never mind the longer life project that we're working on. It's a huge increase for us. So we think the combination of these next few months as we and then, as I said before, if the prices stay up, the alternative mining method where we can bring the capital down as well, just says that the potential to improve upon those PEA results is a primary focus for us right now. And towards the third and fourth quarters of this year, we'll have the data that hopefully will support those intentions that we have right now.
Great, thank you. At this point, we'll move on to the live Q&A session. We have some questions banked. I'd like to remind everyone in the audience that you can, of course, submit questions on the Q&A panel on the right-hand side of your screen. First, to start things off, Steve Head asks, how have the various levels of governments in your respective mining jurisdictions been to deal with? We need the copper, but have to juxtapose that with ESG. Not all jurisdictions share the same ESG priorities. I think the question being specifically, how have the various levels of governments in your respective mining jurisdictions been to deal with?
Well, I can start. We've been dealing with the government on permitting in Peru, and I've been working there for 12 years. And there is a process to get that done, and it starts with the community stakeholders. We take that very seriously. We engage with them. They're partners with us on the project. We've been successful in working well with them. The government wants to see that in Peru, that we're working well with the local stakeholders. That's important, and it should be important to every mining company, and I think it is today. Certainly, we take those seriously, and the government's been very receptive, and we have people locally in the country that provide us with advice in terms of understanding how the government bureaucracy works, so that we can work with them to try and expedite things and do things in a proper way, the way we would do them anywhere else in the Western world as well. So we certainly bring the same level of importance to ESG when we work in Peru as we would anywhere else.
Just to speak to BC, where we operate, but it's obviously a tier 1 mining jurisdiction with a fairly well established permitting regime, and we're obviously at the exploration stage right now, so not in the process of moving a project concept through full permitting, but certainly have very smooth experience with dealing with the mines ministry in that regard. And echoing what Brian said, I mean, obviously interactions and consultation with local indigenous communities is a key part of resource development in any jurisdiction in the world, and BC is no exception to that. We, as I mentioned before, are based in a fairly brownfields area in BC, and have very good and long-standing levels of consultation and engagement with our respective First Nations communities in our area.
And I can echo the same. Manitoba at the government level have been extraordinary to us. They've actually granted us a concierge. We have one-stop shopping. Before, you'd have to go off to the hydro folk, and then off to the environment folk, and then the labor folk. I think Manitoba's really tried to push themselves back up the Fraser Institute rankings, and I think they've made some really good steps along the way. The other piece of that is we've enjoyed extraordinarily good relations with the First Nations, particularly at Norway House, who have partnered with us in our major drill program at the Tower property. We were able to give them jobs. They provided services for us. So I think we've enjoyed great relationships with all the governments that we've been involved with.
Thank you. Christopher Maltlin asks, at what price do you believe copper substitution occurs in various industries? Example, copper for aluminum.
I would say it's sort of a question on what the use case is, where substitution makes sense. I don't think it's simply a matter of price point and time factors in considerably there as well. I mean, I think if there's a spike in price where end users are really thinking through those substitution questions, it's really I think views on how long those price differentials are going to be in place are brought into question. And we were obviously talking earlier about the copper industry. I think has a pretty good ability over the long term to respond to pricing signals. Maybe not over the short term. So we'll see what sort of environments do evolve in the future there. But yeah, I think it's really a question of what usage applications are actually appropriate to look at substitution for. For examples like aluminum, there certainly are situations probably with things like transformers or distribution in well kind of insulated environments where that could work. But I know there are a lot of engineering complications and concerns around that example of substitution.
I agree.
I agree. I don't have any other.
Fair enough. The next question comes from Jacques Gavin. How much copper was produced globally last year, and how much is expected to be produced this year? And what is the present global demand? How does it look like a few years out?
Yeah, I did dig up some numbers on that, and I think the refined output, so obviously there's some recycle attached in the refined output number, was about 24.7 million tons last year. Mined output was obviously somewhat lower than that without the recycle, and it was actually almost the same as the year before. And I find that extraordinary, given how a fair number of mines had to respond to COVID during the course of last year. So I think that's the direct answer. It was about 24.7 million tons last year. This year, they're expecting a slightly higher output. They're not seeing any major outages. Could be question marks, I guess. If you look at the price today at $450, I think someone's forecasting perhaps we're not going to meet the forecast output this year. And I'm trying to think why, because I don't see any major stoppages at the moment. But Chile is having some interesting COVID implications currently that could be an issue. Don't know, especially Chile being the largest country producer of copper. In mid-April, 15th, 16th of April, they reported 38.9% COVID vaccination rate, first jab, which was the third highest for any country in the world. And yet at the same time that they released that data, they reported the two highest days of new infections for COVID that they'd had since the beginning back in March of last year. So there's something going on in Chile, and if it means a major shutdown, clearly we're not going to make that amount of copper that has currently been forecast. And maybe that's a bit what we're seeing in the price at the moment.
Yeah, I would echo that. Is that the challenges with COVID, we're not out of that yet. It's more likely that it's going to create problems with supply over the course of the year versus years where we had no COVID disruptions. So we're going to see how that plays out through the rest of the year with the new variants. And I think no one really knows how much it could disrupt supply as we go forward in the bigger producing countries.
I view the market as roughly 30 million tons per annum, and there's a lot of very compelling demand forecasts that show that doubling in the next 30 years, so getting to something like 60 million tons by 2050, which on a CAGR basis doesn't sound that impressive. It's like 22.3%, I think. But if you translate that into production output, it's like an additional 1 million tons per annum additional growth in that market. And if you compare that against declining production profiles at a lot of the major suppliers around the world, it implies the need for a large number of new mines to be brought online.
Okay. Christian Carl Simard asks, isn't aluminum a real substitution risk to copper?
I think in certain limited applications, again, I think there's engineering issues with it from a corrosion and fire safety perspective. So in probably in transformer wire turning applications, limited ones where it's not exposed to the elements. You might see that, but wholesale substitution risk, I think, is very low there. It's obviously used in big applications for moving electricity, and things like transmission lines are really cost and more the cost weight considerations in terms of the transmission towers themselves.
Yep.
And Elk asks, China's import dependence on copper is established, but does the panel expect its import to use ratio to increase in the new BEV age?
Import to use ratio. Well, I mean, I would expect their usage to continue to increase, and they're a huge target market for BEV. They obviously would. I would expect their import requirements to scale with usage, if not more. So that ratio could be the same to higher in the future, I would say.
Yeah, I would agree with that. I think that they will. They have the ability to move fast. Faster than other countries in terms of moving in the EV direction. Certainly. I think that there is only growth in their usage of copper as we go forward. Certainly, everything that they've signaled that they want to do, leads to increased need for copper supply, and you can certainly see that as they've moved out in the, so that they can control supply into their own country. So they're very aggressive offshore, looking for copper.
All right, fair enough. Well, folks, I know that we didn't get to all of the Q&A, but that is all the time that we have for today. So I'd like to thank, first of all, everyone that asked questions and everyone that came and attended the event. But of course, I can't miss the fact that thank you to the panelists. Thank you, Alistair. Thank you, Leith. Thank you, Brian, for coming on. This has been an enlightening conversation, high value. So thank you.
You're welcome.
Thank you, Cam.
Thanks, Cam. You're a gracious host. Appreciate it.
Yeah.
Well, with that, I'll be ending things off. Of course, this will be recorded and will be available to watch after on 6.com. And I hope that everyone has a safe day, and cheers. Have a good one.
Thanks very much.
Thank you. Have a nice
Thanks,
weekend,
everyone.
everyone.
Yeah. Thanks.
Take care.
Bye-bye.